Good morning, this is Tim Aman from BDO. Welcome to the Fintech Friday session. We'll get started now. There are a few people that are continuing to join. I'm laughing at myself a little bit because I've got 3 screens here and it takes me a while to find where the mouse is on the 3 screens, but we're ready to go now. And so again, good morning, everyone. For those that don't know me, I'm Tim Aman. I'm the global leader for FinTech for BDO and also the national leader for financial services here in BDO. And we're launching our 2nd year of Fintech Fridays. Obviously, we were hoping to meet face-to-face like we did last year, but obviously the COVID-19 pandemic has sort of impacted everyone sort of on the webinar. And so we've decided to delay the launch of our Fintech Friday series, but we're very happy that we've started again. And hopefully everyone on the webinar will find this very enjoyable. For the first day, we have Rebecca Schot-Guppy, who I'll have her introduce herself, but I think a lot of people know her from Fintech Australia. And we also have Will Sinclair, who's one of our business services partners here at BDO. Just a few housekeeping points as we start. You can submit questions in the questions tab. I'm sure a lot of people have participated in a lot of webinars during the pandemic. So put your questions through and we'll look to be answering those as we go through the session. So we're hoping that today is going to be an interactive session. I will actually ask Will and Rebecca a few questions. But as we stop and pause, if we've got audience questions, we'll be looking to weave those into the next hour's conversation. We do have a few presentation slides, which is just a bit of a background on BDO and FinTech Australia, as well as some things that Will is working on. We won't be presenting a lot of slides. What they will be referred to, on the screen. We will make these available after the session as well. If you are having any technical difficulties, click on support. We've got a few people in the background, Maddie and Amy, that are working behind the scenes, ready to help support any technical issues that you have. This is also being recorded, so this will be available if you want to listen to this in the future. And we also will be providing any contact details. We will be looking to have a series of additional webinars coming up, so watch this space in terms of what we're going to be doing over the next few months. So in terms of what FinTech covers, this is and this will form the basis of a lot of our webinars and some of our conversations that we're going to be having today. We've sort of defined FinTech covers, and it sort of aligns with what you'll see with other companies as well as FinTech Australia. And what we're going to be looking to do is focus on some of the subsectors over the next 4 or 5 months. So today is going to be really a bit of an overview of what's happening in the sector, what's FinTech Australia doing to support the sector, what are we doing at BDO to support FinTechs, and then over the next couple months we'll be diving more deeply into some of these particular subsectors. So maybe what I'll look to do now is just get Rebecca and Will to just give a brief introduction about themselves. Again, we were very lucky that Rebecca's taking the time to spend some time with us this morning. Rebecca's, as a lot of people probably know, is based down in Melbourne. So she's been in quarantine, can't get up to Sydney. So we do appreciate the fact that she's taken time out here. And so Rebecca, I'll just hand over to you just to give a brief introduction, and then I'll have Will introduce himself.
Thank you, Tim, and it's my pleasure to be here this morning. For those that don't know me, my name's Rebecca and I'm the CEO of Fintech Australia. Fintech Australia is the peak member body for Australian fintechs, and we're here to drive change both across the culture and the economy. We do this, and we have 3 pillars, and our 3 pillars are our advocacy and promotion pillar, which is really our core business, which is promoting fintechs, but more importantly, advocating on their behalf. So recent things that we've been involved in that we'll touch on later are things like the alternative test for JobKeeper, CDR, R&D, and access to the MPP. Our second arm is really our main connect arm, which helps our members grow. whether that is helping members expand overseas or helping our members connect with our corporate partners or connect with each other. And our last arm is grow, and we hope to grow the ecosystem by building out partnerships, such as partnerships with BDO, also helping grow the ecosystem through our 2 flagship events, being the Finnies and Intercept. Fintech Australia is proud to have grown from 50 members 4 years ago to over 300 members now. There's about 650 fintech startups in Australia, and we continue to see that number stabilise and grow. We're proud to say that we have most of the big startups as our members, including Athena, Afterpay, Data Republic, Raise, Lendy, TrueLayer, Zip, which some of these are now becoming household names. Just like Tim spoke about before, our membership base covers all areas of fintech, including payments, lending, wealth, insurtech, regtech, and data management. I'd like to thank Tim again for having us today, but I'll just quickly touch on some of the success that we saw from some of our biggest fintechs over the last year. We've seen a 60% increase in revenue. We've seen 6 of our biggest members get bank partnerships, 9 fintech to fintech partnerships. There's been over 3 billion capital raised, and we've seen 5 major mergers and acquisitions in the area. And more importantly, we're seeing more of our companies expand overseas. If anyone would like any more detailed data in relation to our success stories, we've published individual member success stories on our website, so please feel free to go there. Thanks, Tim.
Thanks, Rebecca. Will, why don't you just give a brief introduction about yourself and your background?
I will. Thanks for that, Tim. Good morning, everyone. My name is Will Sinclair, and I'm a partner in our Business Services division here at BDO. First of all, I probably should start by saying I can assure you that is me in that photo. Obviously, I'm showing some of the effects of COVID. Don't look exactly quite as fresh-faced as that at the moment, but so as I said, I'm a partner in our Business Services division, and typically what we do is we work with a really broad range of clients. And we help them with a really broad range of general tax and business advice, and helping them to grow and manage their businesses really through sort of every stage of the business cycle. But in recent months, probably no surprise to anyone, we've spent most of our energy on helping our clients to try to navigate what's been obviously an incredibly extraordinary and difficult time, and this has meant a real focus on having conversations about business plans and structures, and helping our clients with cash flow modelling, and of course a lot of conversations around helping our clients to access some of the government stimulus and relief measures that have come along with this COVID period, and obviously there was a period there where I seemed to speak about little else other than our beloved JobKeeper program. I think there was a point there where I woke my wife up because I was talking about JobKeeper in my sleep. But look, I'm really delighted to be here today and have the opportunity to talk about fintech, which is really one of the most interesting and dynamic areas of the market and the economy. So I'm delighted to be here.
Thanks, Will. And as I mentioned, I think now what we're going to be doing is asking questions, and I'll get Rebecca to provide some comments, and then Will as well. But again, if you do have any questions, please make sure you send those through to the tab, and we'll ask either Rebecca, Will, or myself. We'll look to respond as we go. And so again, not surprisingly, today's focus is really on probably the impact of COVID-19 and what's been happening in the fintech space. I think probably when COVID and the pandemic first hit, probably Australia really in March, I don't think anyone really knew exactly what this was going to be. I look back at those, the weather was still good. People, I think, were just thinking it was just going to be a bit of a sickness and would be back to normal. I think probably most people, as we got through April and the Easter and school break holidays, started to settle in that this was probably a bit more serious. And then obviously what we've been seeing in terms of the second wave is really, it just shows how quickly, COVID can sort of impact, local economies. So, now that we're probably sort of 5 months, into the pandemic, and we pretty much know that borders are going to be relatively locked down probably for the remainder of the year, it's probably a good time to reflect in terms of what we've been seeing on the ground, and probably just a little bit in terms of what we expect to happen for the remainder of the year. And so probably the first question that I look for Rebecca to see is, in terms of, the black swan event about COVID-19, have you seen certain subsectors of fintech thrive, or, on the reverse, struggle in relation to the pandemic?
Thanks, Tim. I think that COVID-19 has really been a tale of two stories. I think that obviously people would know that the buy now, pay laters of the world, the really B2Cs, are really thriving at the moment in relation to people managing their funds in a different way. So obviously Afterpay, Zip, AzuPay have all really done well. Other companies that have really done well out of this are things like Indebted. Unfortunately, the insolvency rate has gone up, and they have a customer-centric approach to insolvency, and they've done so well that they've even looked to expand to the UK during this period. I think the fintechs that have struggled the most have actually been the B2Bs, so the ones that are selling into big corporates or incumbents, which we all know during COVID really took a step back and looked at their core businesses and how to drive efficiency. I think we'll see that change. I think over the next 6 months, we'll really see, big incumbents or enterprise go back to looking at fintechs and how they can help with their regtech solutions or drive efficiency, or even just drive better customer outcomes. But I think that, there is going to be a problem in the market, and I think we'll touch on this a little bit later in relation to how companies scale. So companies need access to capital, and we've seen that dry up over this period, but more importantly, access to capital is normally the worst 4 quarters after a global downturn. So I think that that's probably going to be the biggest challenge over the next year.
Okay, thanks, Rebecca. Will, have you, in terms of your view of the sector, where have you seen the areas of fintech that have struggled the most, or are they sort of aligned with what Rebecca's been saying?
Yeah, I'd probably echo much of what Rebecca said there. And in fact, so when all of this originally sort of landed, I think that inevitably the initial conversations with fintechs were very much sort of internally focused. They were like all businesses struggling to sort of come to terms with the new reality, an internal focus on how does this affect our business. What does the short term look like? What's our plan to get through this fallout? But I think as we've started to settle into this period, I think that there are, as Rebecca said, some real opportunities, particularly for those business to consumer sort of areas. Those sort of, even for those smaller sort of companies who have sort of a, more of a fresher canvas, or are able to sort of develop solutions really quickly, and are able to sort of get to market really quickly without having to worry about adapting or migrating old technologies, the sorts of things that might hold back some of the bigger players. I think that there are real opportunities there for those companies that are able to react to the market and get to market really quickly. And I think one of the really interesting examples we saw there was that one of the business lender fintechs that we do some work with, they saw an opportunity come out of the JobKeeper program. One of the key features of JobKeeper was that businesses had to fund the wages up front and then would be refunded or effectively reimburse the money that they had paid to their employees down the track by the ATO. So there was always this funding gap for businesses who wanted to engage in the program but didn't necessarily have the cash flow available to do it. So they saw an opportunity to get to market and to help those businesses to fund that short-term cash flow so they could participate in the program. And that was an incredibly short window for them to react to that. So you really had to be a business that was sort of nimble enough to identify the opportunity to get to market, and then to also to have the sort of the back end and the technologies available to scale up really quickly. And even though they were extremely short-term loans and it was only a very small window, and those that may not have been a massive revenue driver for them in particular, but it was an opportunity for them to engage with new clients and customers that they otherwise might not have been able to. Get people in the door and start working with them. So I think it's exactly that sort of clever and nimble, timely, market-sensitive sort of product that fintechs can produce, and it really shows there are opportunities in all situations.
I just want to jump in there quickly. I completely agree with Will, and particularly in light of the fact that the bigger banks weren't lending to help with JobKeeper up front. But another great example of what Will was explaining was a company like Square. So Square is known for its contactless little square boxes that have really helped at market stalls or small businesses. But what they did over COVID was they actually pivoted to help companies run an e-commerce site online. So they actually pivoted their product to be able to small businesses to go online, and I think that's another great example of companies being nimble throughout this time. We should point out that both these companies are very well capitalized and had the ability to do that based on their traction in the market already.
Yeah, I think it's that's a good point, Rebecca. I think what I've been seeing is fintechs that were well capitalized before March, or had capital raises in train before people probably really settled into the pandemic, and are very well placed. And I think if I put my audit hat on, obviously one of the always challenges with working with fintechs is going concern and cash flow. And I think obviously with the pandemic, it's really sort of highlighted this this immediate sort of impact. People with cash should put themselves in a good position to continue to innovate. Probably my sense, I've been coming in to Sydney pretty much throughout the pandemic because I had some client deadlines, and Stone and Chalk is across the street. I've been over there, quite a bit. It's quite interesting. There's, the vibe was still very positive in terms of innovative. People are still thinking about what they can do differently to sort of capitalize, kind of on the market. It was just a lot different because you couldn't get into Stone and Chalk. Typically, you could just walk up there. Then now you have to call someone to kind of get in there. But you can see pockets of thinking that people are still quite positive about it. But obviously, with capital funding in the back pocket, they're a lot more confident than people that probably aren't. So we'll kind of talk about that a little bit as we go through the session. Just Rebecca, just specifically in terms of FinTech Australia, I know there's been a lot of publications. You've been in the AFR quite a bit, but in terms of what FinTech Australia has been doing to support the community through the pandemic, and you might be able to touch on some of the work you've been doing in the lead up to that, because it has an impact in terms of where we are now.
Yeah, thanks, Tim. I think first of all, FinTech Australia has had a really good working relationship with the government, and I think that was key during the start of COVID. FinTech Australia, I know I was pacing up and down my living room, and it's not very big, everyone, lobbying very hard for the change in alternative tests for JobKeeper. So when initially JobKeeper came out, a lot of fintechs would have missed out. Some still did, which I think we'll touch on, but a lot of businesses were going to miss out because they'd been high growth businesses over the last year. So we were critical in getting the high growth test, and also the test for companies that hadn't been around for 12 months. And we also did a bit of lobbying behind the scenes in relation to the guarantee scheme and the access to the Structured Finance Fund. And then more importantly, on a really basic level, we partnered with a range of different organisations to give fintechs access to any of the services they need. We did a talent marketplace with tier 1 people. We have put out a services guide to help fintechs get all the access to all the knowledge in relation to JobKeeper, government programs, state support. We've also had an open ear. Founders have called me throughout this period, which I think's been really important. Our doors are always open for someone to come and have a chat with. And more importantly, I think the work that we're doing now is key. I think we're working behind the scenes with government on a range of measures for the budget. One, hopefully to stimulate capital into the market, to do some deregulation in relation to the regulatory system. And obviously access to the CDR regime is pretty important for fintechs at the moment, particularly given the costs that are currently associated with accreditation. So working to make sure that the CDR regime is actually accessible to fintechs. I think that's probably a good summary of the work that we've been doing.
Yeah, and CDR is probably quite topical actually, because I'm starting to get calls from fintechs in terms of particularly doing some assurance work over CDR, and obviously they've been looking at what the big banks have done, and obviously big banks have huge groups of people to be doing that particular work. So it's going to be interesting to watch watch this space. In terms of sort of R&D credits, I guess what's your view in terms of that, because obviously there's been a change there, which hopefully the sector will be very happy with.
So during the pandemic, we were pushing to accelerate R&D tax. So because it will be for everyone on the webinar, basically accelerating R&D payments would not change the budgeted amount for R&D. So we didn't think it would affect government in a negative way, but more importantly, it would give fintechs important runway. We've been pushing in the background for a change in the software guidelines to make it more accessible to software companies, and other things we're pushing for it biannual or quarterly payments of R&D rather than annual returns. We will continue to work with both Oz Industry and the ATO in relation to R&D tax, but R&D tax continues to be the #1 issue for Australian fintechs.
Okay, thanks. And I guess this is a question for both Will and Rebecca. I guess, now that we're a few months into COVID-19, are there certain trends that you've seen in the fintech sector that you think will be sort of here to stay, I guess, in terms of, I think, when I first came back to Australia, fintechs were sort of an emerging, subsector. People were quite interested in certain aspects of fintech. Now it's become a little bit more mainstream as alternatives to some of the big banks. But in terms of some of the subsectors, what do you think is here to stay even when the pandemic disappears? Will, maybe I'll throw to you first.
Yeah, no problem, Tim. Look, I think, just even anecdotally, I think anything to do with, anything connected to digital payments or cashless transactions is going to continue to be strong, and there'll continue to be a growth in mobile transactions. I think that we're just seeing, this has just forced people to take up that sort of technology in numbers that possibly we wouldn't have seen before. And in fact, I had the experience the other day of going into a cafe and having to ask them whether they took cash, because it has become so common now that that all sorts of businesses are insisting on cashless transactions, so completely unique sort of situation there. I also think the ability to sort of offer nimble finance and debt solutions for small businesses is going to be really crucial in the short term as well. I think there's a lot of what this crisis has caused businesses to do, particularly in the SME space, is that a lot of them are reviewing their balance sheets and doing some planning that possibly they wouldn't otherwise have done. I think that one of the things that economic turmoil brings is new levels of discipline, and so we're talking to a lot of clients who are really closely reviewing their balance sheets and looking at their debt facilities, and more and more they seem to be ready to sort of make the move away from traditional lenders. They're not super impressed with what they're seeing through this period. But I think that we've certainly got to be aware that any sustained economic slowdown is going to reduce consumer and business spending across the board. So that I think that's going to continue to have an effect, particularly for the transaction-based revenues of so many fintech companies. And I also think any business with connection to cybersecurity and digital identity management, I think that's going to become even more attractive as more businesses move online, and as more businesses, just like our business, Tim, yourself, it sort of start to move their physical location away from central offices where, sort of cyber security and things can be a little bit easier. And I think maybe that's, this change has happened so rapidly that I think there's possibly a lot of businesses that haven't quite grappled with that side of it yet. So I think there's going to be some great opportunities there as well. I don't think we're going back to the central office model that we've had for years and years and years. I tend to suspect that's over. So I think there'll certainly be some opportunities for fintechs in that space as well.
Okay, thanks. Rebecca, from your perspective, what do you think is sort of here to stay in terms of the COVID-19?
Well, Will certainly took the words out of my mouth in relation to digital identity. I think given the rise in cashless payments and digital transactions, we're going to see a massive increase in digital identity and pushing government to get a digital identity framework. And I think the only way that that's going to work is a public-private partnership rather than the public model in Singapore. I think that we've got a huge opportunity now for our neobanks. So, Will already mentioned the fact that, anything like contactless is going to grow. Well, people are going to be more inclined to sign up with a digital bank, and rather than going into the bricks and mortar, I think there's a huge opportunity in that space. I think you'll continue to see the buy now, pay laters continue to grow. I think millennials and people have made it clear that they want to move away from that credit card and manage their cash through 4 installments. I also think that there's a huge opportunity in relation to data. So people to actually get a huge understanding on what they're spending their money on. So all the wealth management apps such as Frollo or Pocketbook, I think they have a huge opportunity because COVID has made people more conscious on what they're spending money on. So I think we'll see a rise in people actually using data to understand where their spending is. And I know there'll be more and more of the likes of Beamit or Finch where people can just transfer money straight through a pay ID. I think that, we'll see more and more of these push payments and full payments in millennials, particularly given the people's transition to digital.
Yeah, and I think, and if I just put my global hat on for a second, I think that's, I think we're starting to see the rise of digital, across the globe. There's certain parts of the world which, typically haven't been as advanced, from a financial services perspective. A lot of my conversations, for example, in South America, they're quickly accelerating the use of digital. And again, if you look at, if you follow the COVID-19 case study patterns, this is also driving, the increase for use of technology. So, I think there's a great opportunity for Australian fintechs, as they come through the pandemic to think more broadly at crossing borders. I think that's one of the beauties of the sector is that it has the ability to apply that technology, outside of Australia. And I think the other piece there is, there are opportunities with friendly regulators that are very supportive of fintechs. And again, we're happy to have another conversation about if there's a fintech out there that's looking to get into a place like a South America, Chile and Argentina, for example. They actually listen to the community quite strongly, the fintech community, blockchain community, and professional services firms. So I think there are a lot of opportunities. I think contactless payments is going to be definitely here to stay. Beck, you talked a little bit about neobanks, just in terms of what's your view of that subsector? You kind of alluded to, you think there's some opportunities. Do you think there's risks for the neobanks coming into a crowded Australian landscape?
Totally. Australia has, obviously 4 institutional banks that people are pretty loyal to. There's going to be 5 or 6 neobanks in the market. Can they all succeed? Who knows? I think the key to that success will actually be the product differentiation. So really great examples of that is Revolut starting to do its crypto trading and some of its equities trading. I think 86 400 has already shown its differentiation by offering home loans, whereas the other neos haven't quite got there yet. And then obviously Up is dominating that space at the moment, and I think they've really shown a willingness to their consumers on what their product roadmap looks like. And the latest product that they released this week was a partnership with TransferWise to give people more certainty and also more clarity on when they transfer funds in other currencies or spend other currencies on what that trading rate is. And obviously TransferWise has one of the best currency rates in the world. There is a huge banking market. We have 25 million people. So I think there is an opportunity for each of them, but like how much of the market share will they take, and will they necessarily be everyone's first bank? So I happily have 3 or 4 of the neobanks. I kind of need to try them all. They're our members. I think that's only right. But I still haven't moved all my money away from the traditional banks in relation to where my salary gets paid. I think that will take time, but it doesn't mean I don't use Revolut for traveling, or it doesn't mean I don't use my Up card. They just have different functions. I don't know if I need 10 bank accounts, but hey, we're moving away from having just one at the moment. But, I think they've all got an opportunity. It's just how much market share will they get?
Okay. And I guess just switching back a little bit in terms of the government, and this is probably a bit of a question for both of you, in terms of what's your sense in terms of the Australian government, in terms of the stimulus package that they provided, and if you're able to compare that to either other regions or other countries in terms of what you think we should be doing differently, or do you think the government has really come out and provided appropriate packages to support fintech community through the pandemic and by their stimulus packages? Beck, maybe I'll start with you.
Look, we have to commend the government for all the work that they have done. And I think, JobKeeper has been a massive stimulus to the economy. However, it's a bit of a mixed bag for Australian fintechs. It's been great for a lot of data companies or payments companies or things that have seen just a regular downturn of 30%. But a lot of fintechs actually couldn't get access to any scheme. Input tax businesses such as lenders, unless they had a secondary arm, were prevented from accessing the scheme, and also pre-revenue fintechs and startups. So a lot of innovative businesses, not just in fintech, missed out on the regime. I think that is kind of where we've been lobbying really hard in relation to specific innovation support, similar to the UK, France and Singapore. I think that there is a real opportunity for government to get involved in having either a low interest rate loan scheme or something like convertible notes. So taking equity stakes in businesses. Now, we don't think the government should actually just randomly back 60 different fintechs or innovative companies. We think that they should back companies that have already been backed by investors, i.e. the VC funds, very similar to the French program. This would be a program that really does drive innovation and backs horses that VCs have already backed to be winners. And more importantly, I think that the R&D tax program, which I already spoke about before, is something that we really need to look at. The UK increased their rate, New Zealand increased their rate. We continue to cut our rate, and I think that the more that we cut our R&D tax rate, the worse effect it has on our innovation economy.
Okay, thanks. Will, what's your view of the, maybe from a stimulus package perspective? Do you think it's doing enough for the sector?
Yeah, I would probably again just echo a lot of what Rebecca said there. Again, I think the government does need to be sort of commended in terms of what was rolled out, and also the speed at which they reacted. It may have seemed to a lot of people as though a lot of these things are a little bit slow to sort of be rolled out, but I can assure you, having worked in tax for 15 or 20 years, it was rolled out at light speed, and that did cause some confusion as well, but it has to be commended because it needed to respond quickly there. But I'd agree with Rebecca in that it was difficult for a lot of businesses in the fintech area to access some of the the programs, and that primarily for any business that was pre-revenue, or as Rebecca sort of referred to, that primarily derived its income from input tax services or sales. But look, the lesson that we learned, particularly in relation to JobKeeper and looking towards JobKeeper 2.0, is that just encourage all businesses to have a really close look at the rules. One of the lessons we learned was that even businesses which on the face of it were going to struggle to access those those stimulus measures, when we had a really close look at their business and a close look at how the rules would apply, and particularly once the alternative tests were released, we sort of found that there were businesses which were able to qualify, which possibly on the face of it might have struggled. And so I'd always encourage people to do that. We haven't as yet seen the formal rules around JobKeeper 2.0, or what's being called JobKeeper 2.0, which is an interesting name because it sort of indicates this is going to be an upgrade of the old one. I don't think that's going to be the case, but look, we haven't seen any of the rules. Sorry, Rebecca.
I've been assured that JobKeeper 2.0 will include the alternative tests. I've been assured.
Okay, I think that's excellent news, and it'll be interesting to see what they roll out. And on the face of it, it does appear to be sort of an extension of the existing program rather than sort of expanding it in some ways. But look, it'll be interesting to see. I think that they're sort of saying that the cost of this next phase will be about $20 billion, which would indicate that somewhere around 1 in 3 businesses that are currently in the program will stay in. And I think that they are going to have sort of broaden the rules, compared to what we've seen, if they're going to get that sort of number in there, because on the face of it, it looks like it's going to be tightened up. Look, the only other thing I wanted to, sorry, go on, Rebecca.
Savings will come from the fact that part-time employees will no longer get the same rate, and I think that's important.
Yeah, that's a very good point as well. And so, look, I mean, the only other thing I did want to talk about was the 2 things that are probably sort of underappreciated sort of measures that came out of COVID. One was the support from the Australian Taxation Office. I think that they have been really good in terms of allowing extended payment terms for businesses. But one of the things that's done is that it has allowed a lot of businesses to effectively kick their tax debts down the road. This is not relief from paying tax. This is simply an extension of time to do it, and effectively an interest-free loan from the government in relation to those things. And the second really interesting thing is the safety net that was provided in terms of the insolvency provisions of the Corporations Act. That's due to come to end next month. Talking to some of my colleagues here in business recovery and insolvency, they do expect that to be extended through to March as well. But the interaction of those 2 things, even though that was really fantastic in terms of allowing businesses to keep as much cash as possible in their business, I think that might create some issues for businesses that aren't monitoring their balance sheets really closely, because those debts are not going away. They're simply being pushed down the road. And so, I always, everyone we talk to is sort of encouraging, look, you have to have a plan for when all those sorts of things come to an end. But look, on the face of it, it's been very difficult. I fully support everything Rebecca said around, expanding, programs to help support fintechs. I think there's been a lot of talk in the media around sort of having a green-led recovery to this, but I think that's sort of been hit on the head. But I think if we had more of an innovation-led recovery, I think that would be really be welcomed, and the government's shown a willingness to support businesses. So hopefully we will see some of those programs she mentioned brought to light.
Yeah, and well, that probably leads into a little bit. I think we had a poll question in terms of the stimulus, announcements. Maddie, if you're able to, maybe it might be worthwhile to just sort of see on the audience in terms of what they've kind of done in relation to. You can read the question here. What measures have you put in place to overcome the stimulus announcement and the potential cessation of packages in March 21? Will and Beck talked a little bit about this, but just interested to get the views of the audience, because we might be able to have a follow-up question on that. So we'll just pause there for a second. But while we're pausing, Beck, I might just ask you just a little bit in terms of, you mentioned a little bit about capital before. Are you starting to see access to capital starting to pick up, and if so, in what sectors of fintech?
To be honest, Tim, I'm not seeing it pick up yet. I think the Melbourne lockdown, and we've got 3 more weeks to go, has really put that a little bit on hold. I think that we won't see, access to capital really in the market probably until early next year. Sophisticated investors are being more risk adverse than ever. VCs say that their checkbook's open, but from my members, that doesn't seem to be the case. So hopefully we'll start to see the flow of capital early next year, but at the moment, from all reports from our members, we're not seeing that yet. I have hope that, maybe the rest of the country is starting to open up and capital is becoming easy, but certainly from a Melbourne perspective, we're not seeing that.
Okay. Yeah, we're starting to see a few people ask a few questions, but I think, probably the issue is going to be if how desperate do fintechs need to raise capital, and obviously it's going to come down to pricing, etc. And it links a little bit, just last year we talked about readiness for people to raise capital, and it probably depends on where they are on that journey in terms of readiness. So I think there's probably, some work to be done with, for fintechs between now and when they look to see the markets opening back up, to get themselves ready, to make sure that they put themselves in the best position for the best terms. So the quick poll results, regular cash flow forecasting, Will Sinclair will be thrilled to hear this. He loves to talk about cash flow, the cash flow model. So I guess that's probably not surprisingly, just given that real focus on COVID-19 in the beginning and the cash flow. Will or Beck, do you have any particular comments you want to say on the results?
Look, Tim, thanks. I would only say that you're absolutely correct. I'm delighted to see that, to be honest. We spent a lot of time talking to our clients about the importance of cash flow planning and having a 90-day cash flow plan and things. So I'm delighted to see that. I mean, I would sort of hope and expect that that many clients and many businesses in this area are doing all 5 of those things, and really the cash flow forecasting is really a mechanism by which you can make assessments about the others. But no, just delighted to see that. You're absolutely right. So that's all I've got to say on that.
Yeah. So now you can dream about cash flows and JobKeeper. So that will be
it's fantastic.
Well, I can just let you know that cash flow forecasting is something that I've been doing regularly at Fintech Australia over the COVID months to make you also feel great.
I feel very warm and fuzzy now, guys. I really appreciate that.
So that was thank you for that. What I might do is there's a few questions that have come through the chat. I might just sort of ask. There's a neobank question, just in terms of branding, and Beck, this is probably more for you, just in terms of. Do you think the neobanks will have an issue with the branding, just given potential financial instability or lack of clarity, perhaps around some of the neobanks, which might sort of probably not drive people to use it as much as maybe the neobanks might think? How do you think they're going to overcome that potential branding issue?
Yeah, I think this is something that I touched on a little bit before. So I think initially you'll see people use a neobank as their secondary bank. So they'll stay with their incumbent in relation to getting their salary paid in, but they might use a neobank for their travel card, or for their everyday payments, or to manage their money, or even just to do their crypto trading. And I think what will happen over time is, through using your neobank as your secondary bank, that people will build brand association and then build trust. And I think obviously after the Royal Commission, trust is key. And then we've also got to think of the new market. So this might be talking about people like you and I that have banked for a while, but millennials or new people or 18-year-olds coming into the market, or even 16-year-olds when they get a new bank, they want to get something that's really quick and easy. They don't want to have to go to the branch and sign paperwork. So I think that, as more and more people start opening accounts, you'll get brand association. I think that that's something that UP has done very well, really targeting those uni students or people getting their first accounts, because their plan is that these people get their first accounts and then stay with them and then get their loans with them. But for the rest of us, I think we'll start to use them as our secondary accounts and then hopefully build that trust over time. And brand does play a role, and that's why I think that they'll be our secondary banks for a little bit of time.
Okay, thanks. Beck, you talked a little bit about capital, and I think our last polling question is really around sort of access to capital, and so again, I'm not sure where our audience is, so they could be in different states than Victoria or New South Wales or different places, but Maddie, maybe if you put up the access to capital question, because I think again when people started with the pandemic, either they had cash and they're going through the 90-day cash forecast. As they're coming through the remainder of 2020, probably companies out there are starting to think, how are we going to get the next round of money? So just you can kind of read the question: how we overcome access to capital. If you have plans to raise capital in the next 6 months, what are your plans? That would be good to know. While the polling is being taken place, one thing I am seeing is, there's in some clients where they have investments in fintech, they're reassessing, do I continue to fund those fintechs, or how do I actually unwind my investment in a particular fintech? So there are some people that are starting to think that, and then on the flip side, a lot of people are still thinking there's a lot of opportunity. So I think it's going to be in certain of the subsectors where I think we're going to start to see continued, investment. And I think that's probably going to be in that digital platform, that wealth platform. So Will, do you have a view in terms of capital raises? Pre-guessing what the studio audience is going to expect.
Yeah, look, I agree. I think there's probably a sort of reasonably serious lack of funding given all of the uncertainty in the market. And I think that the primary source, again, not wanting to preempt the answers to the poll, but the primary source of funding for fintech players has been and remains, private funding, institutional funding. But I think that more and more we're seeing a move away from the sort of seed and early stage, sort of companies to more later stage, fintech companies which are seen to be a little bit safer. And I think we're sort of seeing that. I think I was looking at some figures there last night, which indicated that that there had been a fall in the amount of sort of capital raisings by those seed capital and venture capital sort of stage fintechs, and a move towards the bigger players. And I think over the last couple of months we've seen particular sort of Robinhood, I think, and Stripe have both had some significant sort of capital raisings which have been reasonably successful. So I think that there might be a move away to those from the early stage to sort of the later stage players who are possibly in a sort of a better or more secure phase of their business cycle.
Yep.
I'm intrigued by this answer. Not many fintech companies have received private equity investment. So interested to know what fintechs are online, because that's not been a huge if we're talking PE money, that's not been a huge source of investment. Obviously, private, sophisticated investors is probably the #1 source, but if we're talking PE as private equity, we haven't seen much of that.
Yeah, I think it's going to be interesting to watch what happens in this space. So again, if I put my global hat on for a moment, when I talk to the US, they have pockets full of cash and they're looking to spend it. And so I think it's going to be interesting to see if there are countries that are looking for a good country to invest in with a relatively obviously stable government and regulatory environment, you know, this could be a market for private equity. But to your point, Beck, we probably haven't seen a real rush of that money coming in here historically.
Yeah, I think it's interesting also that the answer there in terms of the merger, that no one was looking at sort of merger opportunities, because I think that you know, it's almost inevitable, at least in the, you know, sort of short to mid-term. I think we're going to see, you know, an increased amount of market consolidation there. I think, you know, if there's only so much capital to go around, then, you know, we might see some, you know, smaller fintechs have to make the decision between dropping out of the market or seeking partnerships and consolidations with other businesses.
And we've seen that already. A really two great examples are Lone Dolphin and Joust merging this year, and Frollo and Hit Money merging earlier in the year, and then Frollo being acquired in the last few weeks. So I do think we are actually seeing a lot of mergers going on, and I think that's important, and I think it'll be a trend going forward.
Yeah, I really agree with that. And I think there may also be an opportunity for some of the more established sort of players in this space that they may well look at the opportunity to sort of, you know, snap up some of the, you know, smaller startup businesses, you know, sort of bring on their, you know, sort of technologies and look to leverage off their technology or platforms and market presence. I think we might see a little bit more of that as well. So just interesting to see no one who answered the poll anyway seemed to indicate that was a consideration for them. But, anyway.
Yeah, I think the other factor probably is the bigger banks, you know, in terms of, you know, I think they'll be opportunistic in this sector, and I think it wouldn't surprise me over the next 6 to 12 months where potential plans of a fintech to maybe sell to a bigger player that could be accelerated. So, you know, that's a topic that's going to be a topic later in one of our fintech sessions. We're having actually our corporate finance team participate in December, so we can probably run a same poll question in December and compare it to what we're running in August to see where, you know, kind of where we're up to. I'm mindful of time because I think we only have a few minutes left. So I just want to, you know, sort of ask Rebecca and Will just a couple final questions, and more probably, I guess, Beck, I'll start with you in terms of, you know, what's your kind of prediction for the remainder of 2020 and as you get into 2021, and I guess what are some of the key focus areas that you're going to be working on, you know, from a Fintech Australia perspective?
Starting with, I think what we're going to see for the rest of 2020, I think that we'll see the bigger fintechs continue to grow. I think we'll continue to see Air Wallets, Afterpay continue to scale. I think that, you know, with the wind back in JobKeeper, we may see more fintechs struggle. I do think that there will be a huge opportunity for business lenders when we start to come out of this. Well, other states are already starting to come out, but when Victoria and Sydney really open up, I think, you know, small to medium sized businesses may look at, you know, alternative lenders to help them kickstart their business again and help them grow. And then from a Fintech Australia perspective, over the next 6 months, our key focuses will be the budget, obviously working with Senator Hume and Senator Hume staffers on key recommendations. We'll also be continuing to make sure that fintechs get access to CDR, and the key piece of legislation at the moment is the intermediaries framework, the CAP framework that was released in July. So we'll continue to lobby on that. We have a huge Fintech Australia census that will come out and be published in October. I think that will actually give us some key data in relation to how the sector's going. And from that, you will really set our policy agenda for the next year. And so the 5 key themes that we have in that are digital identity, which is something that we've touched on, access to CDR, again, I've talked about payments and access to the payment rails, and making sure that the consent framework is consistent across the MPP, the BEX, and all the other systems, access to capital, and then R&D. So things that we've actually touched on the entire session. So that census will give us some, 1, data on how the sector's going, and 2, will set our policy agenda for the next 6 months.
Okay.
And more importantly, the Finnies.
Yeah.
BDO is sponsoring an award. In October, we'll be celebrating the success of the ecosystem. The Finnies is normally the best event in the fintech ecosystem, but this year, if you're interested in finding out who's who in the zoo, we'll be live streaming the virtual events that the awards, and everyone's welcome to join.
And just on that, Beck, I think you're looking to cross the border for that event, so we'll be looking forward to you coming to Sydney to live stream that.
I'll be applying for a work permit, I think, to get to Sydney.
Okay, thanks for that. Will, I guess, your closing comments in terms of where you see the sector going for 2020 and your predictions, crystal ball for 2021.
Look, I think Rebecca's answer there was outstanding, to be honest. That was very comprehensive. I think that the big issue here is the uncertainty, but both in terms of, there was the initial uncertainty in terms of how this crisis would hit the sector, but there was also the underlying uncertainty as to how long this will go on. And I think, as Rebecca would know, anyone in Victoria would know, it's a moving feast, like you can move from, it's not as though this crisis will unfold in a linear fashion. There will be periods of opening up and periods of locking down. And I do think, though, the one key thing is that the longer this drags on, the more that issue about access to capital will come to bear on the market. So look, hopefully we can see some resolution to it and a reasonably quick recovery, in which case I think things would be very rosy. Otherwise, I think that's going to cause a lot of pressure. Obviously, the longer it goes on, the more urgent that will become. So I think that will be one of the defining factors. Certainly at the smaller end of the market over the next 6. God, I don't even want to say it. 12 months. It'll be very interesting.
That business uncertainty point that you just touched on, Will, I think is key, even for an organisation such as Fintech Australia. And I do agree with the government's change to an aggressive suppression strategy, because I think the more certainty we give businesses, the better outcomes we're going to get. And this continued shutdown and contract trace and change in regulations provides a lot of insecurity for businesses, and I think it's important we get on top of that. And that's coming from someone in lockdown.
Yeah, I know. I was surprised you were saying that, but I think it's, well, again, thank you, Rebecca, for joining the webinar, and Will. I know we're sort of out of time, so I'd like to thank both of you for participating. But I do think, we have to kind of watch this space, and we'll look to get Rebecca back on another webinar at some point after we've had a few months to sort of have a little bit of a look back in terms of where we finished 2020 and how we're looking going to 2021, because I think some of these issues aren't going away. And so I think, as a community, it's good to talk about this. Obviously, Rebecca, given her role at Fintech Australia, is a huge supporter of the sector. So feel free to reach out to her with comments or questions. I do know we didn't get to every single question that was raised in the chat. We'll look to come back with sort of formal responses, on there. But again, thank you for our panelists for participating. This will be recorded so people can look back on that, and the slides will be made available. Just a very quick reminder before we sign off that we will be having our next Fintech Friday session in September. That's going to be on the 18th of September. You don't have to look at more information. That's just me on Rethink Fintech, but we have been doing some publications in terms of what's happening in the sector. But the next session is going to be on blockchain, and we're lucky enough to have Steve Vallis, the Chief Executive Officer of Blockchain Australia, participating, as well as Jeff Rooney and Ryan Chris, who work with me in the FS space here as well. So again, thank you for your time. I know you guys have been doing a lot of webinars. Hopefully you found this useful and informative. And again, Rebecca and Will, thank you for your time, and everyone have a good day. Thank you. Bye-bye.
Thanks, Tim, and thank you to BDO for all their support with Fintech Australia. We really appreciate it.
Okay. Thank you. Have a good day.